Our customers, at least the ones who continue operating normally themselves, because obviously some of them have been affected, it is business as usual. Fintechs are obviously traditionally more flexible in their processes and can easily adapt to change. Now, if we're talking about traditional banks, they also had to adapt, and perhaps the impact on them was bigger. Before all this, Cyprus had a moderate use of digital channels as regards banking services, and I guess that's true for quite a few places in Europe. So people have not been using these channels as much as they could. Just before the virus came in our lives, people were still going to the bank to pay bills. They were going to the bank to execute transfers and cash checks. And definitely because of regulatory restrictions also, people needed to book an appointment and actually physically come into a bank's branch to open an account or even make changes on their existing accounts. The banks have been struggling in the last 2 years to get customers to switch to digital banking, but also to ensure they can use the benefits of technology to serve their customers better and save on resources. And now, with all the changes in the past year, with everything that's happened, it seems that everybody has to do this faster. So banks are doing everything in their power now to educate people to stay home and do their banking online. I know for a fact that a few banks in Cyprus are even doing seminars to customers to do that. So, having said that, obviously traditional banks are very big in size and they rely on legacy systems, making it a bit harder to completely isolate and work from home. I would say it's also a matter of security and a matter of safeguarding the customer data, but more importantly, a matter of technological ability and capacity, as a number of banks are not there yet in terms of the required technology. Also, as bank branches were closing, especially the period March to June, people had to stay home, right, and do everything in their power to work from home and be supported by their institutions to have the ability to work from home. And I'm sure Marius can testify to this. In the past, working from home was a real luxury that was rarely used in Cyprus. You would even get, the eye if you said, I'm going to work from home today. But now most companies that can actually work from home do so, provided they have the right systems and the right security in place. And what I personally find very interesting in this remote working environment is that there are a lot of softer issues that institutions had to deal with as well to achieve effectiveness. In these circumstances, in the circumstances of a global pandemic, where there is also fear of the unknown, there's also fear of getting sick, fear of your family and friends getting sick, people realize or prioritize on what's important, and there's a shift in priority. So people are more concerned about their own health, their family's health and well-being. And in these cases, their job, their work, in some cases it comes second in priority, but at the same time, people are concerned that their jobs might be affected and that will have an adverse effect on their income. And that creates anxiety that could affect performance. So my take on this is that people should feel they're cared for by their institution to care about their institution. And this is, in essence, a culture of belonging, and people need to feel trusted. In my opinion, management and the board of directors should always take account of the fact that people are perhaps the most important resource, and having or creating the right culture or having a sense of belonging and creating the necessary engagement, all these things are essential to make sure your organization remains healthy and operational under these unprecedented circumstances. Now, this almost overnight switch to remote working has also highlighted the need for continued investment in IT systems and technology to serve customer needs, as well as continuing to operate, submit your reports to the regulator, do your checks, and so on. Traditional banking is being transformed in a much quicker pace than anticipated. And what is important now is are things like remote onboarding, remote servicing, remote anti-financial crime, to basically remote working. And it's a one-way street for banks that we're still considering digital transformation, because it's no longer an option. It's a necessity if they want to stay alive. Regulators who are introducing new guidance notes to regulated entities are continuously and increasingly now encouraging the use of fintech and regtech and even subtech However, we should never ignore the human factor. Technology by itself cannot adjust to new circumstances or changing situations, and cannot identify crime in changing circumstances or think of on behalf of humans. At this point, technology can help us think more efficiently, take decisions more efficiently, and take action that is more efficient and effective. And this has become evident during especially the first few months of dealing with the pandemic. Also, a number of regulators have issued guidance encouraging financial institutions to be flexible in their onboarding processes and to help customers in these weird times. It didn't happen in Cyprus, it happened in places like the United States, the UK, and a few more. And more guidance is to be expected from other regulators to encourage innovative ways to deal with remote onboarding so that the onboarding flows are unaffected. So if we forget COVID for a moment, remote digital onboarding has a number of benefits. It has been, first of all, it has been proven in various studies that hard copy documentation results in frustration from banks' customers and a high percentage of customers abandoning the process. And I will give you an example in a minute. Secure digital solutions that allow remote customer onboarding are obviously growing in popularity, including as a solution to managing the COVID-19 global lockdown. And when you have remote digital onboarding in place, the running costs of onboarding are lower, compliance can be improved and enhanced, and there is also improvement in customer experience. However, not all regulators accept digital onboarding practices yet. If we take Cyprus, for example, financial institutions have not yet embraced digital onboarding, mainly because the regulation is not very clear on this. We have recently, the Cyprus Securities and Exchange Commission has launched a public consultation on digital onboarding. But however, that only affects a small part of the industry, namely investment firms, FX companies, and a few others. But it doesn't affect banks, which are regulated by the Central Bank of Cyprus. To this point, there is no guidance from the Central Bank of Cyprus on this. Also, digital onboarding solutions can be costly to implement in terms of setup costs, but also the resources required, the testing required, and the changes to existing systems to accommodate the solutions. But again, we said that once they are there and once they're in place, they can be they can save a lot on the running costs. On the other hand, remote onboarding does not necessarily mean expensive digital recognition systems. For example, if we're talking about legal entity customers, and my company deals with legal entity customers, now with corporate registries set up all over Europe and in some other jurisdictions, and the requirement to declare the ultimate beneficial owners, it is sometimes unnecessary to burden the customer with providing original documents or to ask the customer to certify them using expensive apostille processes. Also, financial institutions can use video conferencing and put other reasonable risk-based controls in place. But again, all these have to be acceptable by the regulator. And regulators across the world do not always allow flexibility, even though they encourage flexibility. And this can result in sometimes stiff, inflexible processes and essentially bigger issues in managing risk. And I think in these unprecedented circumstances, flexibility is key. And flexibility is also a matter of size, I guess. So that's where we see bigger institutions being more inflexible than smaller ones. Also, what's important is critical thinking and critical decision making. I think these are essential in these times. The example I was going to give to you earlier, I wanted to open a second bank account during the lockdown in April. And I contacted a couple of local banks which were accepting my details remotely. They did set up this very quick process of putting in your details and starting your application. But they all wanted me to book an appointment and go to a specific bank, to a specific branch of the bank for identity verification and signatures. This wasn't efficient. It wasn't efficient because you had to wait for some time outside the branch. It was a time of serious lockdown. So personally, I didn't do it. And this is an example where banks can actually lose customers because of this inflexibility. So simply because the regulators do not explicitly allow this flexibility of sending documents, perhaps by secure email or secure portals, this causes financial institutions to not go out of the way and then be perhaps in a position where they can be criticized by the regulators for not following the rules. Having said all this, one thing we should not forget, and I think it is important to acknowledge, is that the profitability of most financial institutions, not just in Cyprus, but I guess across the world, has been greatly affected by this whole situation. Expansion plans and things like new product launches had to be put on hold. And instead, there were considerable costs for quickly adjusting their operational model to ensure that they could survive. And COVID has proven that we live in a highly volatile and fragile world, and plans or priorities can change and they can become obsolete overnight. At the same time, there's a lot of regulatory requirements, and these are increasing. So we've got, the fifth AMLD. It has been delayed for most countries in Europe, and the excuse now was COVID, but it is coming. Sixth AMLD is knocking on our door, supposedly coming in force as early as next month. DAC 6 is bringing new requirements to European financial institutions. You've got new InfoSec requirements. You've got GDPR, which is in full force now. And even Brexit is putting more burden and a number of changes on how financial institutions, not just in the UK, but also in the whole of Europe, will be operating in the future. We've seen that regulatory fines are perhaps at their highest. Data shows that in the first half of this year, penalties for anti-money laundering, know your customer, and general compliance failings are higher than the same period of the previous year. And this actually shows that the regulators are still very serious in ensuring controls remain in place, and financial institutions continue managing the risk with care, and they are held accountable for their actions despite everything that's happened, despite what Marius mentioned just a few minutes ago about more flexibility in perhaps submitting reporting or in general how you do your business. But still, you're still expected to manage the risk, even in these changing circumstances, and despite the fact that there is no real guidance on how to do that. And Marius, you also mentioned something about how criminals are abusing this whole situation, if I'm not mistaken. And it is true that in every crisis, criminals are trying to find ways to exploit changes in circumstances. And FATF issued a great report quite early on, pointing out these risks. For example, criminals are continuously trying to find ways to bypass customer due diligence measures, and in this time taking advantage of remote working conditions and in the absence of face-to-face onboarding processes. There is an increased misuse of online financial services, virtual assets or virtual currencies, and the unregulated financial sector to launder illicit funds. And there appears to be misuse and misappropriation of domestic and international financial aid, and also emerging funding by the government, as well as other risks that financial institutions should be aware of. Obviously, this is not everything. And we need to be careful, and we need to create awareness around us, because as the world keeps adapting to this situation, so are criminals. They're constantly finding ways to engage in more criminal activity, taking advantage of situations like this, where people are more vulnerable. Also, they need to continue finding new ways of laundering their funds. And that's why we as financial institutions need to be even more alert. So essentially, financial institutions had to quickly adapt to these new typologies as well. And it's really important that FATF acknowledge these new financial crime threats. So from the perspective of the financial institutions, there's two things here. First of all, the spending profiles of customers has significantly changed. And banks and other financial institutions had to adapt to this change by obviously tweaking their systems and quickly adjusting them to be able to help and attend to the changing needs of the customers. At the same time, protecting their institutions from misuse by the criminals by quickly identifying abnormal transactions and behaviors in this fast changing and continuously changing world. And on top, people had to stay home, right? And traditional institutions found it, as I already mentioned, harder to adjust their heavyweight systems to accommodate this. And just to sum up, to me, the biggest takeaway from all this is that things can change and can be very different within a matter of weeks. And as we try to adapt to the new normal or the new future or whatever you want to call it, we need to be aware of the fact that there could be another unknown disruption somewhere down the line. And we need to be able to adjust and to accommodate changing circumstances fast. And that could have an impact on the risks we're facing. And so it will have an impact on the risk assessment. It will have an impact on the management of the risks. So we should always be aware that things can change with little or no warning, and we should be flexible on how to do the things. We should be ready to get out of our comfort zone, and together with the regulators, which is something I want to emphasize, we should be ready to change. Regulators also have to adjust their supervisory approach and expectations, and they need to be able to do things quickly and with no delay. And in closing, I just want to say that it is evident that now it's a time for smarter compliance and not harder compliance. I think that's all I wanted to say.
I love the smarter compliance part.
That's why I said it.
So thanks, Gregory. Thanks a lot. We'll come back to you later on with some questions I have. Antti, what is your take on this? Overall, what Gregory said, and if you want to say anything new to this conversation.
Thanks very much, Marios. Well, good afternoon, everybody. It's a real pleasure to be with you, and thanks to EIMF and Baker Tilly for organising the event. It was great to hear Gregor's commercial financial institution perspective, and I might even be giving some fairly similar comments and experiences over the next few minutes. It's just a shame that we can't be together in person. I'm really beginning to miss all those events that we used to meet up at. You don't get a chance to catch up with friends and colleagues via Zoom and these similar environments. Plus, I've got to swap yet another set of Cyprus flights for a voucher at some time next year, maybe. That said, this virtual meeting platform does allow us to continue to speak about the issues that really concern our community. But it's this virtual environment that's also highlighted some of the relatively new challenges to those working in financial crime arenas since March this year. Now, having spent over 30 years tackling organised criminals and terrorists with the law enforcement, it's probably right that I reflect on what the pandemic times have thrown up for policing, particularly in the financial crime arena. So in February and March this year, I was in Cyprus with Marios and Gregory, and then Latvia and Canada, and doing lots of events in the UK, doing our usual thing of sharing experiences, talking good practice around AML, terrorist financing, corruption and fraud, but particularly in terms of how the public and private sectors can work better together. That was great, and I could see some projects really beginning to flourish, producing some great results by stopping the bad guys who are profiting from financial crime. Then, of course, it all changed. Well, firstly, for my wife and I, we're in Toronto, and it meant we had to come 4 days into our skiing holiday. We had to come home. Within 2 weeks, we weren't even allowed to leave home without a good reason. And then all that face-to-face training I've become so used to over the past few years was cancelled for the next month, and then 3 months, and then 6 months, and then 9 months. So what do we all do now? Now, the first thing that struck me is it wasn't just affecting me and my little world, but almost all of my network and colleagues were wondering, well, what's going to happen in our area of risk and countering financial crime? You know what? On reflection, I think we did actually have a few weeks where there didn't seem to be quite so much crime out there. My former colleagues in the police certainly not experienced the same levels of mainstream crime, and the news wasn't reporting any exponential increases in crime, other than fights breaking out at a supermarket over groceries and toilet rolls. It seems to me that it took about 4 to 6 weeks of lockdown back in March in the various jurisdictions for perhaps the dust to settle and for a better understanding of the current or new threats that were beginning to emerge. What was clear is that all of the unprecedented work that the various governments were doing to provide for those who'd lost their jobs or their livelihoods was going to be undone eventually by ruthless fraudsters, taking advantage of the sudden availability of a range of state funds to both individuals and firms during the pandemic. It quickly became clear that there would be a whole range of business opportunities to make a fortune, and from a more sinister perspective, to convince the public to keep themselves safe or a bit of more solvent in these times of crisis. And that's why we saw the fake COVID tests, the fake government grants, the dodgy PPE that you could buy to protect your family. And you had all the criminals impersonating government, tax authorities, regulators, banks, police, charities, doctors or volunteers. And we had a huge upsurge in the crimes of phishing, vishing and smishing. So pretty much anything online that you can think of. Now, all those people that the public inherently trust to communicate news and requirements was suddenly potentially a scam. But of course, nobody falls for those online scams, do they? Sadly, we know they do. The biggest issue actually for me was that suddenly we had a hugely increased home-based targeted audience. And now they weren't now reliant on a face-to-face world, it was an online world. So you've got The elderly, they're traditionally vulnerable anyway. They were now exploring online options to communicate, communicating with their families and becoming a bit more reliant on IT. But what we saw was they were becoming increasingly fearful of what they see and read. They didn't know what to believe and what not to believe. Then at the other end of the spectrum, I was seeing young people who were constantly online anyway, and possibly blasé about exploring. And you know what? They're not always that security savvy. And then of course, we've got the new entrants. And the biggest new entrants were people like us, working from home, more time on our hands, being distracted, exploring all sorts of other things. And you know what? The threats there are exactly the same with the young. Perhaps we're not quite as security savvy as we think we are. But in real terms, the threats, it almost came full circle for me, because I first started dealing in 1993 when I was on the fraud squad with a black dollar scam, where we had a West African organised crime group showing investors how they could clean up iodine-stained US dollars with a magic solvent. And of course, that was the advance fee. You pay up front, get a magic solvent, you can suddenly clean all your dollars up. Now, we had one during the COVID section where the fraudsters were collecting banknotes and coins because they claimed they'd been infected with the coronavirus. Not really that different, just playing on the vulnerable. And 25, 26 years later, we're seeing exactly the same thing. We know that the figures for fraudulently obtaining state benefits over the past 9 months are absolutely eye-watering. I think in the UK at the moment, I've seen estimates of up to nearly £3 billion worth of fraud. I mean, this is just dreadful. But there's other dreadful figures out there. 4.5 trillion, the total size of money laundering in 2020. Coming up to 1% of the EU 28 countries' GDP, estimated to be generated in illicit markets, coming through for 5 years. 98.9% of estimated criminal proceeds that the EU hasn't confiscated and remains at the disposal of criminals. And that 1.5 billion, the estimated amount of criminal profits that confiscated by the EU, says that only 50% of that is seized or frozen. What I find absolutely incredulous is that the due diligence surrounding the allocation and release of funds was so poor, and the likelihood of recovering those lost funds is really, really low. So what does that show? Well, it's exactly what I've been speaking about for the past 10 years or so. We, the public, law enforcement, public and private sectors, simply do not understand the threats that we face or the criminals that perpetrate the crime. Did we really think that the bad guys wouldn't take advantage of a desperate global crisis? It points to business processes in the honest and real world simply not being intelligence-led enough, thereby not allowing us to better understand risks and threats, and then enabling controls to put things in place to manage and mitigate those risks. It's not just governments, it's the public, it's businesses, including financial institutions. So how do we better understand the threats and the bad guys? I often hear, well, let's think like them. Now, I can assure you, after 30 years in law enforcement, including working in the undercover world as a bad guy, that we can't. The bad guys are different. They don't think like us or do stuff like us in the same way. Since retiring from law enforcement, I've spent the past 4 years working with a whole range of firms from all sectors. The one recurring input for me has always been exactly this issue. We've deluded ourselves that we can undertake robust risk assessments across the whole spectrum of risks, because we're going to be able to predict what the bad guys are going to do next. All sectors, particularly law enforcement, believe this. And that's why so much of the reported crime and illicit money is still in the mainstream. More importantly, that's why the bad guys, that's why the good guys like us remain so far behind the curve, and we're always playing catch up with the crooks. I'll try to explain this in a really simple comparison. So imagine now that you're a firm who's agreed to work with law enforcement and perhaps other similar firms to better understand a new type of fraud or money laundering, or perhaps a new digital onboarding process. Sorry, Gregory, I thought I'd throw this one in. Have a think about the processes and what they might look like, and then compare how a group of criminals might be thinking about the same process from their perspective. So what I normally say is that if you're a law enforcement working in public-private sector partnership, of course, we're going to want to identify all the threats that are out there. And you know what? The bad guys are doing exactly the same. So that's one thing they're both doing. Now, the good guys will look at, work out who's going to deal with this problem in the first place. The bad guys will do the same. So we're on a level pegging at the moment. But of course, as soon as we got there, we start to have some meetings in the good guy world. Now, the bad guys probably might have the odd meeting, but not too many. We'll start thinking about establishing stakeholders. The bad guys don't even think about that. But of course, once we've got an idea of what we're doing, we start discussing all the barriers that exist and stop us from getting stuff done really quickly. The bad guys are beginning to laugh. And then, of course, we're forming inclusive teams. We need to make sure everybody's going to be involved from everybody's. Have a few more meetings. Bad guys are still carrying on with stuff, and we'll prioritise up options. The bad guys are just getting on with it. We'll develop an action plan, and we'll try to stick with it. We love an action plan, particularly in the public sector. The bad guys don't do that. And most importantly, we'll have a load more meetings to work out how things are going. Bad guys haven't bothered with any of this. Eventually, we're going to start some activity, review, and learn from it. The bad news is the bad guys have done all that, moved on about 4 times. We just all go through the hoops. It's what we do, whether in public or private sectors. The criminals just laugh at us. They don't care about all those hoops. And that's why we'll always be behind the curve, unless we can cut through some of that bureaucracy and red tape to speed up the various processes. My argument tends to be that culture, or maybe security reasons and competitiveness, still remain the biggest hurdles to getting things done, whether firms are seeking to improve themselves or working in public-private sector partnerships. All sides understanding about intelligence-led work and sharing information to the maximum possible extent within the law is vital, and that does help in the quest to understand the threat landscape. Then you actually need to resource and make sense of all that intelligence. That's now coming from a variety of sources and partners. Now, there's been a hugely increased emphasis on developing our systems, process and tech over the past years or so, with all our governments and regulators moving to a point where they now require firms and organisations to have in-house or third-party tech with AI or ML capabilities to solve the problem of fraud and illicit finance. That's great, and I love my tech and spend a huge amount of time discussing us with various third-party providers. But tech does not equal analysis or necessarily add context. It doesn't make cognitive or critical decisions. A machine can't be suspicious, but in fairness can make a really good job of reporting it. Computers and machines don't commit crime, people do. Without repeating much of the academic and industry reporting, the simple requirement for all of us is we need great tech and great people. And that's all got to be commensurate to the firm's size and risks. But to be honest, from experience, the biggest barrier isn't necessarily funding or resourcing. It's all about culture and being able to change long-standing, pre-existing approaches to tackling financial crime. I could speak forever on this, and I know that many of you will be similarly frustrated from a range of perspectives. What I will say that it's not all terrible news. There are some great initiatives that are trying to improve the various processes involved in understanding and tackling illicit finance. I was fortunate enough to have been one of the founding members of the UK JIMLIT, Joint Money Laundering Intelligence Task Force, from a counter-terrorism perspective. It's been around since 2015 now, it's developed from a network and talking shop, to be honest, into a government-approved and funded public-private sector partnership that actually delivers qualitative outcomes in terms of enforcement against serious and organised criminals, as well as assisting financial institutions to manage their risks in partnership with public authorities and the government. There are similar great projects through FinCEN in the US. The Nordic KYC utility initiative is a kind of agreement on the KYC standards between banking and Nordics, which stipulates the cooperation of external KYC departments. This alliance is a new way of ensuring extended crime prevention. And then we've got the collaborative transaction monitoring approach by 5 main Dutch banks, and it's been monitored by many, including me, who are waiting to see some expected really exciting outcomes. It's really refreshing to see these projects have gone past those 10 steps that I described in forming the basis to actually stop the bad guys. Now, in these difficult times, I've had countless conversations with compliance teams about how they can adapt to the new environment and perhaps become more lean whilst improving efficiency. And of course, that in-word, effectiveness. Routinely, we come to a conclusion that it's really important to keep things simple and just focus on straightforward things. And it comes down to what we must, should, or could do, and in that order. We need to work to identify, understand, and manage those threats and risks, whether in terms of loss, reputation, or personal risks sometimes. We need to focus on criminal, legal, and regulatory threats, and just remember that some of them can be internal as well as external. We need to streamline processes if possible. And from that, I'm thinking, don't have umpteen different teams doing AML, CTF, fraud, sanctions, ABC. Where is there commonality? Where can we streamline all of those processes to get an overarching risk assessment? But just remember that you can only do so much, and that working with others will definitely make the process easier. So that's a bit of a whirlwind personal view of the really strange past few months. Been doing lots, been doing similar things, but in a slightly different way. I'm sure there'll be some questions about working from home and personal security. So with that, I think I'm going to pass back to Marius to continue with this section and see where we are with questions. Thank you, Marius.
Okay, great. Thanks a lot, Andy. We do have one question in the Q&A. I'm going to ask for anyone who has any more questions to add them in the Q&A. And before I go to the Q&A, I have a couple of things I wanted to ask. So let me start off with Greg first, and then Andy, if you want, you can also follow up. We say a few things. Europol has predicted that easing of lockdowns is likely to see levels of financial crime return to normal, and warned that the crisis we have created will have created new opportunities for criminals. In addition, it predicts that prolonged economic hardship and the vulnerabilities of some segments of the community may drive a rise in illicit activity, including money laundering and cyber-related fraud. How can banks strengthen their approach in relation to it to fight financial crime? Greg,
thank you, Marius. That's an interesting question, actually. But I personally think that despite the pandemic, despite what's going to come next, criminals will always be looking for ways to bypass our controls and to get their money through the system. Criminals will always find ways to do their stuff, and usually criminals are one step ahead of us. And ideally, it should be the other way around. And while we cannot predict the future, we can remain vigilant and we can remain focused. So I guess we need continuous training, right? So congratulations on the venture. It is one step in the right direction. We need a flexible risk assessment process. We need business continuity plans that work, not just for the sake of having them. We need flexible working conditions where we can ensure we continue operating in the worst of circumstances. Also, I believe, and this has always been my belief, that we need to create and to maintain channels of cooperation with the regulators. We are on the same side. Sometimes it doesn't feel that way, but we are on the same side. And yes, we do make mistakes. Yes, there can be internal issues, but in essence, we are both trying to fight financial crime. So we should be together in this. In a nutshell, I guess vigilance and cooperation are the way to go.
Thank you, Greg. Andy, you want to say a couple of things?
Yes, sorry, I was just on mute there. Yes, Marius, thank you. Yeah, I think with this one, criminal appear to be working under the assumption that efforts to contain the pandemic have sort of left the authorities distracted, particularly at ports. So we see that's one of the issues. And so I think it's an opportunity to import large quantities of all sorts of illicit goods. I can say that regulators and law enforcement around the world have been vigilant, and they're warning that the virus is quickly changing the way the criminals actually seek to do those goods. There's some really good reporting out there. The Europol documents recently and the FATF one that Gregory mentioned earlier on. And what we've seen is those counterfeit medical equipment sales, if we use that as an example, sometimes large international shipments have been prominent, and unprecedented demands for the medicine and protective equipment just creates new avenues from fraud. They see that as an opportunity. That's where they jump on as a bandwagon. I think, as I mentioned earlier, at a more personal, local level, at the same time, criminals have sought to target staff working remotely through impersonation fraud, phishing, vishing, and cyber attacks. Now, this ultimately causes a risk, a primary risk to banks, because they may unwittingly process payments and even provide the financing on behalf of fraudulent traders. And the secondary risk as perpetrators attempt to launder the proceeds of that crime through the various financial system. So I think you see things both locally and then at a wider extent going into almost that trade-based money laundering scenario. And that's where I think, from a banking perspective or a financial institution perspective, it's probably where you have the most opportunity to see those changes, where there's something unusual with somebody who may not normally be involved in that type of activity, suddenly becoming in some sort of trade transaction. That's where I'd be focusing some of the efforts at the moment.
Okay. I have a question from one of the audience. I'll ask that one first. I have another question, but I'll come back to that. Let me answer a question from Gabriella Andrei. How can financial institutions diminish ID theft, especially with using remote tools? And also, how can we all diminish the hacker attacks? I guess more generic, the second part.
Is it coming to me or to Andy?
Or to both? Go, Greg. Go, Greg first, and then I'll come to Andy. Sorry. I was asking Daniel, but Daniel didn't answer, so.
Okay, so Andy used a phrase, if I'm not mistaken, earlier. That he loves his tech. I also love my tech, and I think all these new tools are great to help us do our job. And these tools usually have embedded verification tools, and they can help you, do part of the whole verification of the customer to avoid this, ID theft and stuff. But I think, and this is, my general take on AML is, we need to be smart and we need to think. And we need to be smart and think whether what the client is telling us makes sense, right? And that will not only come from the onboarding part of the process, but also from the transactional behavior at a later stage. If we're talking now about, if we're not talking about onboarding, but we're talking about because we did mention hacks in the question. Again, there are tools to be able to verify whether a customer is indeed who they say they are. So, obviously you can use passwords, you can use passphrases, you can use things like voice recognition, you can use things like face recognition, depending on the channels you have available. I know I had an experience with HSBC in the UK. I'm not sure if Andy had the same experience. I mean, to be able to get onto digital banking, you need to go through a very long process of having to, record your voice and say specific phrases and, give a specific catchphrase that you can log on to your account later on. And, all these are very, simple and smart ways of avoiding hacks and ID theft. I guess the best way would be to actually get to know the customer and to recognize whether, to be able to think and recognize whether what the customer is saying is reasonable and what the customer is saying can't be true. For example, if you have a student account, but they launder millions of money through the account, or they transfer, I shouldn't use the word launder, there's something not right there. And, this is where humans have a role to play over and above technology.
Great. Andy, do you want to say something as well?
Yeah, just briefly. Great question, Gabriella. I think I don't disagree with anything that Gregory said there. And for me, I suppose you have to think about, your onboarding and CDD systems. What have you got in place already at your firm? Just because things have changed, you shouldn't be looking to totally revamp all of your onboarding and continued due diligence systems. But obviously we have to do them differently and perhaps a bit more flexibly. What's the firm saying? What's in their policy? What's the regulator's policy? You talked about digital onboarding processes earlier on. Well, in the UK, we're moving rapidly towards that. Now, my teams that I work with doing the penetration and vulnerability testing are teams of former hackers and criminals, some of those. And this is the sort of thing we do. And I agree with everybody that once you've given your initial details, the key to onboarding for me is verification. Now, certainly voice or facial biometrics, really, really good. The video's better than spoken word, but there's a whole industry around deep fakes. To be honest, if the bad guys are good enough and they desperately want to onboard onto a certain type of account, it's going to be hard, particularly in the current climate, unless you've got great either in-house or third-party solutions to beat some of the things they're doing. But then it does come back to, once you've got a bad guy in the system, you then have to monitor what they're doing. And they still will do things that are unusual. There'll still be signs of suspicion, even if you have the misfortune of onboarding a bad guy. So it's not just about the initial onboarding bit, although I think it's the single point of failure most of the time. If you can get onboarding right, if you can get verification right, that's great. And a lot of this is keeping things simple. So I go back to my old detective training school days where it was the ABC: assume nothing, believe nothing and nobody, and check everything. So that's the ABC. For me, the D is you document everything. Everything you do or don't do, including all your decisions, write them down, because that's what will come back to bite you, particularly by the regulators or potentially even the police if things go wrong. So there's no huge science to onboarding and continued due diligence, but you need to keep things simple, particularly if you're working remotely. Make sure you document everything you do. That would probably be my biggest bit of advice over the past 6 months. People who are working remotely, make sure you document what you're doing or not doing. That's really, really important for you, your firm, and the clients. Because
if you don't document, it's like it never happened, right?
Correct. I've had that at court, Gregory, as you well know from our counter-terrorism experience.
Exactly.
Because it's not written down, officer. Thank you.
Great. Thanks both. Okay, I'm going to another question from, I see Leandros, and I have 2-3 questions here. Okay, Leandros, could there, the question is, could there be a client behavior recognition tool? Is there such a thing?
There are obviously
Gregory,
tools.
I'm coming to you.
Yeah, there are obviously tools out there that utilize machine learning to predict customer behavior and to analyze customer behavior as it happens, so that you can predict future behavior. Obviously, there are tools out there, but again, you know, these are great for flagging things to you, but they cannot take decisions for you. So even though I also love my tech, as I said before, you know, never underestimate your own critical thinking. These systems will flag, will you know, pop out some red flags. They will flag the behavior that's out of the ordinary. But if you cannot, first of all, if you don't know what's normal, you cannot really, you know, put any thought or look at what's abnormal. So first of all, you need to know the customer well. But again, critical thinking is what it's all about. So the tools can help, but they cannot replace you.
Anything?
Yeah, Marius, I think the only thing I'd add to what Gregory said there is I totally agree, because the first thing my hackers and bad guys do, who then socially engineer people, is they work out what's normal. They act as a normal person would who's looking to be onboarded. They act as a normal client would. And then they work out the bad guy's way around it. So yeah, you can put as much in as possible. You've got to remember there's always a return on investment here. How much effort are you going to put into certain systems and processes to manage the risks? And that's what a firm has to sort out. Of course, if you're a big multinational, you can be putting in an awful lot of money into your various solutions that might be able to do a lot of this work for you. I agree with Gregory. An awful lot of this comes back to a human interface, but with some great tech in the background, which flag up the appropriate trends that you want to be seeing, as opposed to all the false positives. And it's some of that's experience, some of that's just good tech, but you always need that human overlay. And coming back to what I said a minute ago, documenting yes or no and why. Okay,
I have a question here from Stavros. He's moving kind of conversation more on the cybersecurity issue. He's asking, is cyber security training for staff important? Are regulated firms forced by regulators to train employees? Some examples he gives of banks, investment firms, insurance companies, etc. And if yes, which staff members should be mainly trained in which service lines? And I guess let's start with Andy on this one.
You just knew you were going to love to ask me about who do we need training in a firm. I'd always say you start with the top, because people like us, the professionals, we actually probably know what we're talking about. We know what the risks are. We know what a lot of the threats are. We identify them. For me, routinely, it tends to be the boards that really don't have a grasp of threat and risk, and quite often the importance of training. Now, my view is certainly there is a requirement, as everybody knows, whether it be through direction from FATF to individual regulators saying anyone working in particular in either regulated sector or certain compliance environments must have some sort of training around AML, CTF, bribery and corruption, and risk assessment. Now, for me, I haven't heard of anybody who says you must have cybersecurity training. But for me, cybersecurity is all about risk management, understanding risk, understanding where the threats are. And the biggest threat globally at the moment is from some sort of online attack. What that is, where criminals don't even get out of their chair, they just sit at home, they're not at risk, they're not in front of anyone, they're not likely to bump into the police, they're sitting at home in their chair, just constantly and in bulk attacking individuals and firms. So yes, I think cyber security is really important. It's very, very difficult to work out what type of cybersecurity training. I think for me, it's more about understanding the threats and risks. That comes back to what should you as an individual in a firm be doing to make sure, if you're in the office, you need to be sure of A, B, and C. If you're working from home, you need to be particularly careful about X, Y, and Z. And that's the type of training for everybody. And you definitely need to give that training to the bosses because they need to understand that, and then it permeates through the organisation.
Thank you, Andy. Greg?
Yeah, I totally agree with Andy. Even though there is no specific, I haven't come across a specific requirement for mandatory cybersecurity training. I think if you're working in a financial institution, if you're working on a server, on a portal, if you have access to customer information, obviously you need to do a lot of training. Studies have shown that most of the cyber attacks, or at least a big number of cyber attacks, have involved unintended actions from those using your systems, and risk can be mitigated using training. I've gone through, I'm not sure how many cybersecurity trainings when I was working for the bank, and also perhaps a couple in the last year I've been here. And when they did a couple of tests, a couple of dummy tests with sending us, these, emails that are obviously fake internally, just to test our awareness, I did fall, in the trap of clicking that click. And it doesn't matter how much training you get, you will always need more. And one of the things I always say is, if you stop learning, you die. So yeah, training is important. Embrace training. It doesn't matter if it's cyber, security, or AML, or whatever. Training keeps you alert. And again, going back a few years, I used to get really upset when we would start an AML seminar and they would just go over the same things again and again. But then I realized that this happens for a reason. If you don't remind people their obligations and the way money is laundered and what they have to do, they tend to forget. So it is absolutely important that training is ongoing, and training is a lot. Sorry, I can't talk about this forever.
I know. So our audience is quite shy. I'm not getting any more questions. If you do have some questions, ask them now. We are going to be online for another about 10-15 minutes. For the cybersecurity, Greg, I just want to mention, and everyone, I just want to mention that there is a EU agency for cybersecurity, ENISA, and also there is a EU Cybersecurity Act, which is coming, was introduced this year actually. We will see the European Cybersecurity Certification Framework for companies coming into effect soon, for products, to basically verify and certify the actual electronic products. So companies will need to do that. So more things will come in this space. Yes, cybersecurity is definitely important. Another question from me then. And during the COVID-19 crisis, so over the last, since March basically, since January actually, people are relying more than ever on computer systems, mobile devices, the internet, to work from home, to communicate, to shop. Shopping online became the norm for anything nowadays, to share and receive information. Over the past few months, we have seen evidence that malicious actors are exploiting these vulnerabilities to their own advantage. All this new movement online. How can organizations at large protect themselves, but also how can individuals protect themselves as well? Let's start with Greg on this one.
I think we talked about cybersecurity in the, a minute ago, which is, I guess, training on cybersecurity is very, very important. But I think the best way to protect ourselves is to first of all acknowledge the issue. So acknowledge that new technologies, new products, and new channels can be exploited. And I guess we should be proactive in identifying the risks and also the loopholes, and ensure we can manage the risks that arise before even launching those products and before even using these new systems and devices. That doesn't mean being conservative. That just means being careful, and there's a big difference there. Obviously, we cannot predict everything, right? And we saw what happened a few months ago, that there were systems in place. There were all these mobile applications and mobile access for people that should work from home, or people that would access their systems remotely. And in a risk-based environment where we're looking at the risks in priority, there is room for mistakes, and we could get hit. In that case, we should acknowledge the mistake, close those loopholes, adjust our controls, and move on. I don't think there's much more you can do. It's basically train your people, have the right systems in place, and if something happens, just deal with it.
Andy, anything?
Yeah, I suppose, this is one of the big questions, and we've certainly seen this with the remote working. It's really an oh dear moment for me, because this is where my experience of working with those former criminals to undertake the vulnerability testing has really gone into overdrive. We've tested, I think, 7 firms since, all financial institutions since lockdown. And when we're testing in non-pandemic times, we explore vulnerabilities from 3 perspectives. We always look for physical vulnerabilities, that sort of covers the premises they might be working from. Remote, that's whether they're vulnerable from online threats, so we don't even have to turn up, those hackers. And then there's always the really big one, social engineering, and that's always a mixture of both physical and remote, and because it's normally engaging with employees of the organisation. Now, in these strange times, do you know what? We do exactly the same. We haven't tried to change that just because these people aren't necessarily at work. And the one that always gets most traction is social engineering, because it's about people. Yes, you can put good cyber defences in, you can put the right firewalls in, but actually your people tend to be your biggest vulnerability. Now, for years, I'm sure all of you have been undertaking a lot of what we used to call KYC, know your client, know your customer, whatever that is. All that onboarding and verification. And then once you've done that, you're going to do CDD and EDD. Now, I try to encourage people to also do a slightly different version of KYC. So it's know your criminal. That's most likely to be the external threat, but also be diligent that you haven't got a criminal internally as well. Because whilst we never like that idea, unfortunately, that's something that we routinely turn up. So get to know as much as possible about the people who you're doing business with, obviously, and start working with inside your firm. But once the bad guys are in, it's really, really hard to stop, and even harder to get rid of. So sort of going back to a theme I mentioned earlier on, you need to constantly monitor and document, because it's your risk, even if you outsource it to a third party, onboarding processes, physical or remote access to data, because that's what the bad guys are doing. They're not looking to steal your money. They're actually looking to steal your data these days, because it's worth far more on the black market. Always think about privacy issues, what you can and can't share, because that's where criminals tend to undermine you as well. And just remember, those third-party software or managed functions are great, but of course they're going through all the same difficulties that we are in terms of security as well. In simple terms for yourselves, strong user accounts, strong passwords, the use of VPNs, it's really, really important you do that. But coming back to something we talked about a minute ago, training. Doesn't matter whether it's cyber training, AML training, training. Whatever you do, whatever you don't do, put it in a policy and report everything you are or aren't doing. That would be the mantra probably throughout all of the questions that we'd have. Thanks, Marios.
All right, so we should be closing soon. So let me give you a couple of last questions to each. Basically, To sum it up and close this event, I wanted to also see if you have any examples of anything that happened during this period of such new schemes that we have seen, any changes in typologies. Also, if you have seen anything interesting that FIUs or regulators are doing to address these issues, and any changes that you might expect to see in the fight against financial crime post-COVID period, let's say. Anything that is happening now and is probably going to stay with us forever. Let's start with Greg.
Okay, I hope I remember what you've been asking. It's a long question. Okay, so you asked for if there are new typologies or something new that we've seen over the years. I think we already touched upon a couple of these, but one of the things that that came about, is with availability of these emergency government funds and more online activity during the pandemic. We've seen instances of misuse of these government funds and taking advantage of the changing patterns of the population, and that obviously, as I mentioned earlier, it brought about a need to tweak transaction monitoring systems. We've seen fraud related to medical products. I'm not sure. I think Andy mentioned something about that before. For example, masks and medical gloves that never reach their destination. The panic and anxiety that we've seen, especially during the first stages of the crisis of the pandemic, presents, again, a great opportunity for criminals and imposters to design new scams, impersonating perhaps people from the government or from healthcare providers, or even impersonating banks. For example, for supposedly rescheduling loan repayments. We've seen these new schemes of governments to help folks with their loan repayment, and we've seen loan installments postponed for a few months. And obviously, we have seen an increase in ransomware attacks in the sense that you're asked to pay, in cryptocurrency or make a transfer to avoid your computer being locked or personal data being leaked, and that's really scary if you're working from home and rely on your computer. So crypto criminals appear to take advantage of the ongoing COVID pandemic to hit their victims by receiving them with different methods of crypto-related crimes. And if I remember correctly, I was reading. I know that Andy mentioned some figures for fraud, but I was reading that crypto-related fraud exceeded 1.5 billion in the first 5 months of the year, and that's sort of a global take on that. Another thing we've seen is obviously an increase in money muling, where because moving criminal funds around using the financial system became more difficult, and it always attracts at some point the attention of banks and law enforcement agencies. So we've seen things like requests and offers to close friends, to relatives, using social media apps to do a quick task and get or earn some money. Job openings, people have been a bit desperate in some cases, afraid of losing their jobs, something I mentioned earlier. So we've seen that sometimes seemingly legitimate job openings, coming about to